Algorithmic trading refers to the use of computer programs and algorithms to automate the process of making trading decisions in financial markets. These algorithms are designed to analyze market data, identify trading opportunities, and execute orders at optimal prices and timing, all without human intervention. Algorithmic trading has grown in popularity due to its ability to execute trades with speed, precision, and efficiency, and it is commonly used by institutional investors, hedge funds, and other financial institutions. Algorithmic trading has become increasingly popular in the global markets, with some of the top players being the United States, the United Kingdom, Japan, and Hong Kong. These markets are known for their advanced infrastructure, regulatory frameworks, and technological advancements that support algorithmic trading activities. High liquidity and trading volumes in these markets make them ideal for algorithmic trading, allowing for faster execution and reduced slippage. Volatility refers to the rapid and unpredictable price movements in the financial markets. It signals the potential for large gains or losses within a short period of time. The regulatory environment plays a crucial role in shaping the landscape of algorithmic trading. Stringent regulations can impose limitations on trading algorithms and require firms to comply with specific rules and standards. This can impact the design and implementation of algorithms, as well as the overall speed and efficiency of algorithmic trading strategies. The technological infrastructure supporting algorithmic trading in the financial markets is critical for executing high-frequency trades and complex strategies. It involves robust hardware, low-latency networks, and advanced software that can process large volumes of data and execute trades swiftly. Quantitative analysis plays a crucial role in the development of effective strategies in the top global markets. By utilizing statistical and mathematical models, businesses can gain insights into market trends, customer behavior, and competitive landscapes, allowing them to make data-driven decisions for growth and success. Explore success stories and case studies of algorithmic trading in the financial markets, showcasing the impact of advanced trading strategies and technology-driven approaches.